We are watching Nuburu stock, ticker symbol BURU, live on the market right now, and the price action is absolutely relentless. As of this exact moment, on Monday, December 1, 2025, the stock is trading at roughly 23 cents, specifically $0.2299, and it is down about 5% on the intraday session. But do not let that red percentage fool you for a single second, because the volume tells a completely different story. We are seeing over 31 million shares traded already, a staggering amount of turnover that suggests the market is trying to price in something massive. If you are just looking at the price chart, you might see a penny stock struggling to hold its ground. But if you look at the newswire, you will see a company that is fundamentally metamorphosizing right before our eyes. The expectation here is that Nuburu is just another distressed industrial microcap trying to survive compliance issues and cash burn. The reality, however, is that as of today, this company has effectively planted a flag in the European defense sector by announcing a binding agreement to acquire Lyocon, an Italian photonics specialist, which completely rewrites the thesis from welding tools to NATO-aligned defense infrastructure. This is the tension between what the market sees, a sub-dollar stock, and what the company is actually building, which is a vertically integrated defense and aerospace laser platform. Most investors look at Nuburu and see a manufacturer of high-power blue laser technology used for welding copper and aluminum in EV batteries. That is the legacy narrative, the old Nuburu. But the Nuburu we are analyzing today is aggressively pivoting into the defense and security hub model. Just hours ago, the company confirmed it is acquiring Lyocon for $2 million. This might seem like a small number in the grand scheme of Wall Street, but in the world of specialized photonics and defense supply chains, it is a strategic key that unlocks the door to the European military market. Lyocon specializes in laser sources and optics, and by bringing them in-house, Nuburu is not just buying revenue, they are buying the capability to manufacture advanced laser systems directly inside the European Union. This aligns perfectly with their ongoing partnership with Tecne, an Italian defense contractor. When you connect these dots, you realize that Nuburu is positioning itself to be a primary supplier of directed energy and laser tech for European defense initiatives, which are currently seeing historic budget increases. This is why the volume is 31 million shares. The smart money is trying to figure out if this defense pivot is the catalyst that finally reverses the long-term downtrend. Let's back up and establish some common ground on the technology itself, because it is critical to understanding why NASA and defense contractors are even interested in a company trading at 23 cents. Nuburu's core IP is the blue laser. Traditional industrial lasers operate in the infrared spectrum. The problem with infrared is that metals like copper, gold, and aluminum, which are essential for electronics, batteries, and aerospace, are highly reflective to infrared light. You blast them with an infrared laser, and a lot of that energy just bounces off. Nuburu's technology shifts the wavelength to the blue spectrum, around 450 nanometers. Physics dictates that copper absorbs blue light over 10 times more efficiently than it absorbs infrared. This means faster welding, cleaner joints, and no spatter, which is a defect that can ruin a battery cell. That is the industrial argument. But the defense and aerospace argument is even more compelling. Blue light's physical properties make it incredibly dense and focusable, which is why NASA awarded Nuburu a contract to develop power beaming technology. This is not science fiction. It is an active project where they are testing the ability to beam electricity wirelessly through space using lasers to power lunar rovers or remote habitats. The idea is that instead of hauling heavy copper cables to the moon or Mars, you just beam the energy from a base station directly to the rover. If Nuburu can commercialize that, the 23-cent stock price becomes a historical footnote. However, we must address the elephant in the room, which is the financial health and the stock structure. You cannot analyze a stock like BURU without looking at the risks. The company has faced significant challenges with NYSE listing compliance. We have seen reverse split proposals, we have seen warning letters regarding timely press release disclosures, and we have seen a balance sheet that has historically bled cash. The shift to a dual CEO structure involving Alessandro Zamboni was a clear signal that the company needed a radical change in leadership style to navigate these financial minefields. Zamboni is the architect of this new defense hub strategy. He is the one pushing the Techne partnership and the Lyocon acquisition. He is effectively trying to turn a cash-burning R&D shop into a defense holding company. The risk for you as a shareholder is dilution. To fund these acquisitions and keep the lights on while waiting for defense contracts to pay out, companies often have to issue more stock. We saw a $12 million public offering recently, which creates supply overhead. Every time the stock pops on good news, there are often warrant holders or previous bag holders looking to exit, which creates that selling pressure we are seeing today, where the stock is down 5% despite the acquisition news. Let's pause for a second. I want to know where you stand on this pivot. Comment below how many shares of Nuburu you currently hold, or let me know if you think the defense and space angle is real or just a distraction. Do you trust the management's ability to execute this integration with Italian companies? Drop a comment. I want to see the consensus. Now let's look closer at the Techne relationship, because this is the engine of the current momentum. Techne is not a small player. They deal in electronic warfare, command centers, and military vehicles. Nuburu's partnership with them involves a network contract aimed at joint R&D and shared services. By integrating Lyocon into this mix, Nuburu effectively becomes the laser engine for Techne's vehicle and defense systems. Think about the modern battlefield. It is becoming increasingly defined by drones, optical sensors, and directed energy. Having a proprietary high-power blue laser source that is lighter and more efficient than the competition is a massive tactical advantage. The market is currently valuing Nuburu as if it will fail to execute this. The market cap is hovering around $100 million. If they successfully integrate Lyocon and start shipping certified defense products to NATO allies, the revenue multiples in the defense sector are significantly higher than in the industrial welding sector. Defense contracts are sticky. Once you're designed into a military vehicle or a satellite system, you're there for a decade. That's the moat they're trying to build. We also need to discuss the Schwab Intelligent Portfolios and Fidelity crowd, the retail investors who often look for these asymmetric bets. When you're doing online investing or using investing sites like Robinhood or SoFi Invest, you often see tickers like BURU pop up on the most active or highest volume lists. It's tempting to chase the momentum, but you have to understand the mechanics of the trade. Today's volume of 31 million shares is indicative of high-frequency trading and retail rotation. The stock is volatile. It can swing 20% in an hour. If you're using an individual brokerage account at Interactive Brokers or Fidelity Investments, you need to be aware of the bid-ask spreads and the liquidity. Sometimes on these microcaps, the spread widens during news events, making it hard to get a good entry. You're not buying Apple stock or Nvidia stock here. You're buying a venture capital style bet that is publicly traded. You're betting that the management can survive the cash burn long enough to get those defense contracts signed. The NASA connection is another layer that provides a floor of legitimacy to the technology. NASA doesn't hand out Phase 2 contracts to companies with vaporware. The fact that they are funding the development of blue laser power beaming validates the core physics. Even if the commercial application of power beaming is years away, the intellectual property portfolio that Nuburu is building around it has intrinsic value. In a world where space infrastructure is the next frontier for Fidelity wealth management funds and long-term Fidelity IRAs, holding patents on how to transmit power across the lunar surface is a lottery ticket that could pay off massively in the 2030s. But as traders, we have to survive 2025 first. The company's ability to leverage this NASA relationship into wider aerospace contracts is key. Are there satellite manufacturers who need lighter power systems? Are there drone companies that need laser communication links? These are the questions Fidelity ETFs managers would ask before taking a position. Let's talk about the competition. In the world of industrial lasers, you have giants like IPG Photonics and Trumpf. They dominate the high-power infrared market. Nuburu has always been the underdog with the better mousetrap in terms of wavelength, but they lack the scale to compete on price and service. This is why the defense pivot is so clever. They are moving away from fighting a commodity price war in welding and moving into a specialized niche where performance matters more than price. In defense, if your laser can shoot down a drone or power a remote sensor better than the other guy, the military doesn't care if it costs 20% more. They care about the capability. This shifts Nuburu's business model from a volume game to a value game. If you are self-investing and looking for a turnaround story,